turning to Nigerian markets, of course, as you know, it was up just about 0.5% yesterday, lifted, as you mentioned, also by Dangote Cement and several other companies in the financial space. But joining me in this, right now, as we cross the Diamond Bank, is to talk a little more about the energy sector. Is Samuel Egube. He is in the energy division at Diamond Bank. Samuel, it's great to bring you into the conversation today, and I really want us to focus on the downstream oil sector. Clearly, the big discussion around that is the subsidies and whether or not the subsidies as budgeted for this year would be enough to take out the market. First of all, let's get your views on that. 888 billion is what was budgeted for. We did hear Central Bank Governor earlier in the year indicate that he thinks that we'll probably run out of that before June. What are your thoughts on how the subsidy is being deployed right now?
Well, thank you, Wole. I hear what the Central Bank Governor is saying, and I believe him. The fact is that he makes all of those subsidy payments through the debt office, and there's no reason to doubt those numbers. It was also reported in the dailies that probably the government must have spent almost about 300 billion in January and February alone. If you look at those figures simply on a straight line basis, it will be clear that continuing like this, we might get beyond the 1 trillion mark in spend by the year end. So I believe that the subsidy budget is very likely not to be enough, and it's something that we'll need to look at very closely in the coming months.
All right, so how worried should we be, though? Clearly, banks are exposed to this sector because they lend the downstream oil companies that import petroleum products ahead of the subsidy payment, so clearly there's some exposure there. Of course, the petroleum companies themselves also have to deal with the risk of not being paid subsidies. What are your thoughts on the dynamics there and how the banks may be reacting to this news?
Clearly, they are high-risk alerts, actually. I mean, a statement like that definitely means the economics of the product will not work, and therefore, if there are high exposures in the banking industry, the banks will have to take steps to exercise significant of caution for lending to that sector. You recall that that sector was responsible for a huge part of the delinquents that hit the industry in the time past, and therefore the industry will not want to be beaten a second time. I believe that banks will definitely exercise caution, and if they do and cut back on credit to that section, to that sector of the economy, it will well mean that there might be shortage of imports because the petroleum product traders will be unable to import without bank funding. I also believe that the traders themselves should be watching that fact, because nobody wants to be caught with products in their hand without subsidies to cover for it.
All right, so all that said, should we be cautious about investing in that sector? I mean, I'm hearing mixed signals from some analysts. ARM think, for instance, MRS is a sell. They think Mobil is a sell. They think Total is a buy. Wando, I think many analysts are split on that one. But give us your thoughts. Should we be cautious about investing in the downstream oil sector on the NSE?
I think we should just be aware as to the risks which these scenarios pose, all right? I would say that the days are still a little early to take a significant stock position based on this fact. As the probe still goes on, we are seeing how that plays out, but clearly I will exercise significant amount of caution in playing those stocks. If definitely trades drop as a result of this policy situation, then of course it means profits will head south. And if that happens, then of course it will not be a good sector to stay in the long run.
What about the diversified player like Wando? What's your take on that one? Clearly they are playing in the downstream, but of course they have also inched into the upstream sector.
Of course, what that means, therefore, is that they've hedged their position because they are an integrated company playing across the entire value chain on the downstream, on the upstream sector. And I believe, therefore, that hedge in terms of their business structure would protect a company like Wando from significant income or revenue losses if this situation plays out and the subsidy dries out.